Hey everybody, Chuck Barone. Monday, April the 24th, 2023. Another week of crazy, off and running. Let me hear some of the stuff I got today, guys. The whole world's upside down, getting crazier by the minute. I don't know how you make heads or tails of what the hell's going on in this world these days. But anyway, before we get into all the show and my fabulous rant we're going to get today, let me welcome everybody to the show. Thank you guys for your support, watching the videos, your likes and shares. We really appreciate you guys. Markets today. Well, the market kind of had a blah day. Not much happening. We got a lot of information coming out later this week that's going to move these markets like crazy. So the market's kind of holding their breath today. So stocks end up mixed. The Dow gains 66 points, 33,875. The S&P gains 3 points, 4,137 on the index. The NASDAQ falls 35, rallying at the end, 12,037. So really, with these kind of numbers, a big nothing burger in stocks today. The market, like I said, waiting to get some of this data coming in, still digesting everything that went down last week. So money moving a little bit out of stocks today into the bond market. Yields falling on bonds today. 10-year down 6 basis points, sitting at 3.51%. 2-year down 7 basis points, 4.12%. So you got this 61% inversion still. Rates coming down, though. It looked like at one point everything on the yield spread was over 4%. So yields have come down quite a bit. Inflation's still high. Lots of pressure on the Fed. Getting to their pick your poison moment. It's going to be fun to see what they do, guys. I mean, we'll be able to place our bets accordingly, though. So we'll probably have some advice for you guys when that comes around. But bond market today up a little bit. The dollar, not much happening here either. Down small, still sitting 101.36 on the index. Was up over 102 last week, but kind of just been sitting there between 101 and 103. Not much happening. I think the dollar is ultimately the downtrend is real. It's going to continue down. I just think the pace is not going to be a real hurried one, especially with another rate increase coming up probably in the next couple of weeks, right? With the dollar down a little bit, though, metals rallied. Nice. Good day for gold and silver today. Gold rallied $4.70, $1,988.60 per ounce. Silver up just 6 cents, but at $25.13 per ounce. Good numbers for both of these. I like silver. Keep staying above $25. Looks like gold is having a little bit of trouble breaking through the resistance at 2,000. It ultimately will, and go much higher than that. So, be patient with these things. Sometimes, resistance and support kind of doesn't work the way you hope it would. And, that's how it works. But still good numbers for both gold and silver. Oil today, up very small, up 84 cents per barrel. $78.71 for a barrel of West Texas Intermediate. Still sitting in that trough we've been talking about for a long time, between $75 and $80 per barrel. I think that's where it's comfortable. I think that's where you're going to see oil kind of sit until some type of, I'm guessing, not real economic news, but more geopolitical news than that will move oil. If it's going to be economic news, the U.S. probably heading toward recession. That's going to bring demand down. I'm guessing my oil trend probably heading down. Bitcoin today, not much in Bitcoin either. Down small today, down $72, 27,446. Moving a little further away, though, from that $30,000 number. I think it's going to end up busting through that. I really do. But, guys, as you know, this is not really my strength here, are these Bitcoin and cryptos. I just follow these numbers for the people who listen and are involved in this stuff, who have and own these, Bitcoin and other cryptocurrencies. I kind of like the idea of cryptos. I like the idea of Bitcoin. People I respect are talking about Bitcoin and it being the future. I'll have to do a little bit more homework, but Bitcoin holding its own in this market right now, all things considered. This week, as I do every Monday, let's give you guys some news, what we're going to be dealing with this week. The data dump we're going to get a lot of stuff, mostly later in the week though. Monday, today, not much. Mostly earnings today. We'll get some earnings information that's going to drive this market. But today's kind of a quiet day. But starting tomorrow, we'll get a little bit of data. We'll get new home sales tomorrow. Plus, we'll also get earnings from some important companies. We'll get Google, Alphabet. We'll get McDonald's, Microsoft, Pepsi, Visa. A pretty broad segment of the economy. It'll be interesting to see how these companies are performing. On Wednesday, we'll get a little bit more data. We'll get the durable goods orders, which will give us a little bit of an idea of how manufacturing's doing. We'll get the mortgage brokers index, which will probably be down. We'll get earnings from other big companies, Boeing, Meta. We'll see how they're doing. Again, by the end of this week, we're going to have a pretty good idea of where corporate America is earnings-wise. As we know, they've been having record earnings. They've been having record margins. We'll see if this stuff starts to tighten down like it typically does in an inflationary environment. On Thursday, now comes the real stuff, right? Thursday, we'll get the GDP numbers for the last quarter. Atlanta GDP now says first quarter GDP will be up 1.8%. Thursday, we'll also get jobless claims. That's going to be one the Fed's going to be looking at as well. We're expecting higher numbers on jobless claims. We'll also get some big earnings on Thursday. We'll get Amazon. We'll get MasterCard. We'll get Eli Lilly. We'll get Merck. We'll get T-Mobile. And other big sections of the economy. They'll tell us how drug makers, you're going to have Lilly and Merck, two of the biggest. You'll have T-Mobile, a cell company. You'll have MasterCard to go with Visa earlier in the week. Amazon, tell us how shoppers are doing. Important stuff on Thursday. And Friday is the big day. Friday we'll get the unemployment cost numbers, which I'm sure the Federal Reserve is going to be looking at pretty closely. We'll get personal spending and income numbers for consumers. Chicago PMI, the Purchasing Managers Index. We'll get the University of Michigan Consumer Survey and earnings from big companies, Exxon, Chevron, Colgate, Palmolive. So by the end of this week, we're going to have a pretty good picture of at least where things stand right now. It's going to be fascinating stuff, and we're going to go through every little bit of it with you guys. News you guys need to know today. Well, guys, not good news for the banks right now, man. These banks, bad stuff happening. Moody's comes out, downgrades 11 regional banks, including some pretty well-known banks, Zion Bank, U.S. Bank, Bank of Hawaii, Western Alliance, First Republic. 11 total banks getting downgraded. That doesn't mean there's an imminent collapse like Silicon Valley Bank. What that means is they expect their earnings to come down, the stock holding not as promising, so they're downgrading those as far as their earnings, their stock value, blah, blah, blah. I don't think they're downgrading their credit standing much. But you add all that up, banks not doing well. Now you add in this credit crunch that is already underway, guys. I was reading an interesting story today. It was telling me that all lending, every bit of it, cars, houses, consumer loans, et cetera, commercial loans, everything, all dropping through the floor right now. Not because there's not demand for them, although demand is down significantly with rates where there are, but banks just don't want to lend right now. Inverted yield curve getting to them a little bit now. And credit crunch coming. This is all part of the grand design of the Federal Reserve to create this big recession. They're going to get this recession, okay? Now, I tell you this, guys. You add it up. You got these regional banks. If you own stock in these banks, please take a good look at your positions. Because if you add it all up, it does not seem like a very promising place to be right now. You got most regional banks have big commercial exposure. Commercial real estate, as we know, is on the verge of collapse. There's going to be a ton of defaults, empty office buildings. 98% of commercial loans are done by these regional banks. You have lower volume of loans across the board. So even though they're having higher rates earning more money, if you're doing less loans, it then turns into a break-even or loss. That's bad. Now you got falling reserves. So the reserves these banks are holding, treasuries, all going down in value. All of this, plus nervous Nelly customers, clients, depositors, whatever you want to call them for banks, all adds up to I would tell you now, take a very close look at your positions if you're holding bank stocks. Make sure your company is not one of these 11 downgrades, because you're probably already feeling the pain of that in your stock portfolio today if you own these stocks. Not good stuff, guys. Not good for regionals. I'm feeling now like we pretty much are going to have this recession this year. A lot of people are talking about soft landings or, no recession at all, no landing. I'm telling you right now, it's going to be a thump, guys. It's not going to be pretty. When you add everything up, again, just simple common sense tells us high interest rates, high levels of debt, student loans coming back on. That's $18 billion a month in payments people got to be making, but they have not had to. You got job losses, the dollar falling. You got more people borrowing just to buy, doing this buy now, pay later to get food and gasoline, guys. So the consumer is just about out of gas. Job losses piling up. This tells me a recession is coming. Take due notice and protect yourself, man. The things we've been telling you guys to do will work well in a recession. I promise you they will. Just get yourself in a position where you can get through this recession okay, and then there's going to be tons of opportunity when it's over. To wrap things up today, I got a couple things I want to get off my chest. I got a couple things that I read this stuff and it makes my head want to explode. So I got to just talk about this for a couple of minutes. First, this Biden scheme now, Democrats and their equality, equity, whatever they're calling their freaking nonsense now. The new Genius Plan. This is really something. Now they've decided that they're going to charge people with good credit and good down payments more money for real estate to subsidize people with crappy credit and less money or no money down. So now this is the rob Peter to pay Paul thing, right? But it's just ass backwards, guys, okay? You're going to punish people who take care of business, save money. You're going to punish people who pay their bills on time, take care of their credit, are concerned about, I don't know what the right word is, but, holding on to high credit grade, fulfilling their obligations they've committed to, the normal American way. I borrowed this money, I got to pay it back. Now you're going to take those people, the people doing the right thing, and punish them basically, to reward and subsidize people who don't do the right thing. People don't save money, don't pay their bills on time, don't have good credit, don't care about their credit, don't care about paying bills on time. This has got to be one of the dumbest, most asinine, stupid friggin' things I've ever heard proposed. I can't even believe anybody with an active brain cell at all could get behind this stuff. Okay? It's just silly. But what it is the government has no money. They have this desired objective. So guess what, schmuckatellis? Guess what, guys? Working people get to pay this. Because rich people don't finance their houses. Okay? Real estate already in trouble. This is not going to make real estate better. Is this the best we got, guys? Really? This is the genius power in our government? Coming up with proposals as stupid and disgusting and ridiculous as this? And then my next rant, I'm finishing it today. This Google thing, okay, Alphabet, they got a CEO. Guys, the guy must be really, really special because they paid him, the number's just out, $226 million last year. $226 million for one person, okay? At the same time, the company lays off 10,000 people, and their stock goes down 40% in 2022. I mean, what is this guy worth if the stock goes up 40%? $600 billion? What? Guys, the average salary, the median salary at Google, $279,000. So obviously working at Google, pretty good paying job. You got some skills. This yo-yo made 808 times more than the average worker. This is our corporate now. This is the genius of our corporate thinkers. This one guy, in their opinion, is worth more than 10,000 people. He's 800 times worth more than 800 times the average worker. that they're paying $279,000 to. Man, corporate greed running amok, government ineptitude and idiocy running amok. Guys, this is not the end. We're heading toward the end, okay? This is not going to be a bad result. I don't know how it's going to all play out yet, but you can see the path around is not a good one. Please, save your money. Hold on to a portion of everything you earn. Invest it conservatively. Play the game tight to the vest, man. Get out of debt. Pay your debt down. Don't take on new debt. Very simple ideas. But the simple ones, I mean, you have to master those before you can move on to the complex stuff. And just by following these simple rules, you'll put yourself in a position to survive and even thrive in this chaotic, crazy, stupid, greedy, ridiculous world we're living in. Anyway, guys, that's it for the day. We'll be back tomorrow to bring you guys up to date on all the news. We appreciate your support. It's going to be a wild week, guys. Batten down the hatches. We'll be here to bring it all to you. Until tomorrow, then, take care. Thanks.